Jordan, good to see you. Today we are sharing 3 year-end tax tips. The end of the year is always a great time to start thinking about your taxes for the upcoming year. So we are sharing 3 tax savings tips that we can implement today to help get us on track for 2024. And your first tip, you say, consider maxing out your Roth IRA or consider a Roth conversion. We are recording in November, but people were calling October Rothtober.
Yeah, well, as long as you do it before December 31st, it'll still qualify for this tax year. So it's October, November, December. You just want to make sure you do have a plan to implement that. And that could mean, like you mentioned, contributing to your Roth 401k, getting more money in tax-free accounts forever, because tax rates historically are at all-time low where taxes are on sale. So it's a great opportunity to funnel money into those 401ks. But what if you aren't working anymore, or you still have some more wiggle room in your tax bracket? You could consider doing a Roth conversion, taking money from that pre-tax IRA, move it into a Roth IRA, and there is no income restrictions on a Roth conversion. So I just want to make people aware of that, because they can do as much as they want if it fits the plan.
Then we get all those tax-free dollars in retirement. I always love the sound free. And then second, you say offset your gains by harvesting losses. This is known as tax loss harvesting. Can you explain how it works?
Yeah, just to go backwards a little bit, there's the 3 types of tax money. There's the tax-free Roth IRAs that you don't pay tax on the gains. There's the tax-deferred traditional IRAs where you get a tax deduction when you put it in, and then it grows, and then you take out money, and then you pay taxes that year you take it out. The third type of money is our non-qualified assets. Those are generally assets held in brokerage accounts, your CDs, your checking, any little bit you make, you pay taxes on it. So when we're referring to the brokerage accounts, maybe you have some stocks that are kind of a little bit down this year. You can sell off some of those stocks at a loss and harvest that loss to take it off your tax return. Now, the only thing were to caution, there's a 30-day wash rule, or we can't sell that stock on December 31st, buy the same stock on January 5th, because we got to wait at least 30 days, or we have to sell one fund that's very similar and then buy a different fund that's kind of in the same realm, just to take advantage of those losses. And maybe you have a big loss, and maybe it's a $10,000 loss. Legally, you can only deduct $3,000 off your taxes each year, but that doesn't mean you lose that extra $7,000. That just carries forward to future years.
All right. And third, you say seek tax efficient investments. What specifically are you referring to?
Yeah, some ideas for that might be an HSA, a health savings account. If you're going to use it for medical, which we probably all are when it comes to Medicare or any kind of a health cost, you can put money into an HSA and kind of let it grow, get a tax deduction, then let it grow tax-free, and then take it out tax-free for a qualified expense. Another way, if for some of us are around RMD age, if maybe we don't need that extra money for the RMDs, we can do what's called a QCD. We can send that funds directly from the custodian to the charities of our choosing and legally pay no tax liability on that. Now, we got to talk, and there's more details behind that, and make sure you code it correctly with the accountant, but it's a great way to shelter that tax. And lastly, I'd like to show people kind of different alternatives that kind of grow assets in Section 7702 of the tax code, which is tax-free. It's life insurance, actually, not meant for a death benefit, but to really grow those assets and then take income off of those assets tax-free. Great time to think about it before year end.
Interesting. This is nice to talk this through, Jordan. Some, a little bit more time sensitive than others. So if somebody would like help with any of these strategies, what's the best way to reach you?
They can schedule a time. We call it a possibility meeting to see if we can help you. Our main number is 847-499-3454. We'll try to get you in before year end, but if not, we'll have a plan for the next year.
Exactly. All right, Jordan, thank you.
Bye-bye now.